No, absolutely, Matt. I mean, I think over the last few weeks, we've definitely seen a more positive turn of events on at least expectations about the global economy. We've started to see global PMIs take a bit of a turn. You've started to see data in the US, and particularly on the consumer side, being somewhat better. The Fed's kind of gone on a pause, we believe. But equally, a lot of uncertainties. And I think to us, the key thematic here is that the markets might be a little bit extended in terms of pricing in a very positive trajectory on an end to this whole tariff tension. Now, it is possible that we might be past the peak in tariffs, but it's also true that the market seems to have overpriced their expectations, not just about a ceasefire, if you might, on trade tensions, but about a potential rollback, so material de-escalation. And I think that's what will probably define how we trade from here into end of the year.
So the market perhaps is getting a little bit ahead of itself and just how significant any phase one deal could actually be. Is that what you're suggesting?
So I think the narrative has shifted, right? The narrative up until last week was potentially about the phase one deal only being a ceasefire. But I think it's moved from there to being about material de-escalation. The market seems to be trading like that's already a done deal. But like we all know from over the last 18 months, this whole engagement is so complex that we don't know it's done till it's actually done.
When it comes to Asian markets more broadly, is there one particular market that stands out ahead of the others that perhaps may be more investable as we approach the end of the year with all of this in mind as well?
I think, look, from a somewhat defensive standpoint, but also one which will probably structurally benefit, I would argue the ASEAN markets look better in that respect. I think they are less invested in that entire trade engagement talk, if you might, and are probably going to be, from a medium-term thematic, probably going to benefit as some of that business, some of that investment sort of reallocates itself away from sort of the China and that supply chain and away into other markets in this part of the world.
What about the Chinese economy as well? Because it's a question that I've been posing to a number of people that have been coming on the show over the last week or so. Has the Chinese economy turned a corner as we move into 2020? Yes, we've seen stimulus efforts. We're starting to see some of the PMIs turn around a little bit and surprise to the upside. So do you think that whole story about this slowdown in China, yes, we're likely to see, of course, the headline number continue to move down inch by inch as we progress over the coming quarters. But do you think that the Chinese economy is now perhaps holding up a little better than it was, say, 12 months ago at the start of 2019?
I think it is. I think it is, and it's partly related to the fact that the headwind from trade issues, at least over the last few weeks, seems to be sort of retracing back a little bit. I think it's a bit premature to say whether we are necessarily at the turning point on the cycle, but almost certainly we are either at the turning point or very close to it. What equally, though, seems very clear is that the turnaround is not going to be very rapid. So it's something which will have to be very closely managed by policy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.